Hey, it's TaxQuips time from TaxMama.com. Today, TaxMama hears from Josh in the TaxQuips Forum with a complex question about reimbursement plans. So TaxMama wants to explain the overall concept. Well, my family and friends, when you're an employee, it's important to understand the difference between the two ways your company can reimburse you for your business expenses and the different costs to you. There's an accountable plan and a non-accountable plan. In an accountable plan, you turn in all the receipts to your employer. You get reimbursed for all of your expenses, and if you get an advance, you return the difference if your costs are lower. What's the tax impact? You break even. You don't pay any extra taxes, and you don't need to include your business expenses on your tax return. And then there's the non-accountable plan. You get the money from your employer, perhaps as a monthly allowance or a per trip or event. You use the money to cover your expenses and you keep any excess. What's the tax impact? Well, the full amount of the allowance or advance is included in your wages. I don't know if you know that. As a result, you pay 7.65% of FICA and Medicare and all the taxes on those funds as if they were wages. To recoup the income taxes, you have to use itemized deductions on your tax return. Often you can't because you don't have enough other itemized deductions. And even when you do, your expenses are reduced by 2% of your adjusted gross income. And more than that, when it comes to meals and entertainment, you lose 50% of the deduction. Pretty nasty, isn't it? Tomorrow I'm going to explain more about the company's written policy and how it impacts a tax audit. And remember, you can find answers to all kinds of questions about employee business expenses and other tax issues free. Where? Where else? At TaxMama.com.